Ladies and gentlemen, welcome to the Gold Waves webinar. And there's an L missing in that coin, isn't there? You spot it? Shortly we'll be joined by Mr. John Robertson of Ideal Financial Group, who makes this possible for me to be able to speak freely to you about stock markets and gold and ASX shares and the like. And I'll put...
Yeah, good evening everyone, and welcome to the Gold webinar with David Hunt and the Profit Hunter Group members. I'm John Robertson, or JR, from Ideal Financial Group. Really looking forward to hearing what David's got to say tonight, especially with the run in the Aussie gold stocks recently, and get to hear what David's got to say about gold, and also how gold's going to affect the Australian shares. Anyway, I'm John Robertson from Ideal Financial Group. Hope you can see my screen. Welcome to tonight's webinar. As David mentioned, Ideal Financial Group is a broker, and we can trade global markets for you. We can trade your ASX shares. We can also trade your gold. So it's the ability to do that from one platform. So as I mentioned, you can trade your shares, all the PHG stuff. You can place it as one order, so you can place your entry and your exits all at the same time, so you don't have to micromanage your orders, which is really important, especially in this time. This is a quick example of a gold trade from earlier. This is a gold futures, which I put up on the screen recently. So this is an example of a PHG trade. David recently had a couple of PHG trades on gold, and one of them got stopped out for a small loss. So obviously they can't all be winners. And they're back in the markets at the moment, shorting it. So this is an example, selling one on a limit at 12.52, buying back on a limit at 11.78, so that's your profit target and the stop loss. Okay, that's put in as a stop limit. That's 12.69, so that's your stop loss. So you can work that out. Now remember, gold's just rolled over from the June contract, which first notice comes on tonight. So you don't want to be in that contract. You want to be in the next one, which is the August one, and first notice is obviously in July, around about the third Thursday, I think, off the top of my head. Gold trades in, for anyone interested, this is the gold futures, but you can also trade gold EFTs or gold Australian stocks. Many different ways to trade gold. This is an example here. See, the gold trades 1231.9. Okay, so as you can see here, the lowest, it trades in 0.1 or a tenths. So it's a bit like saying 10 cents, 20 cents, 30 cents. Okay, so it goes 1231.9, 1232. Okay, each one of them $10 US. Now remember, because this is gold, it's traded on NYMEX. It's the New York Metal Exchange. So that's traded, obviously being a New York exchange, it's traded in US dollars. So anyone needs a hand being able to trade gold or any of the gold stocks, please give us a ring. Ideal Financial Group can help you with those trades. Remember, gold you can trade from the long side or the short trade, or the short side being a futures. I'm JR, or John Robertson, from Ideal Financial Group. I've been trading futures for many years. Was one of those guys on the last slide, as you can see, with the coloured jackets who used to yell and scream and carry on. Used to trade my own money as well. Also traded for one of Australia's largest merchant banks, and also Australia's biggest futures broker. Okay, I've traded the Aussie shifts, I've traded European markets and traded the US markets, so traded all the different markets around the globe, and can help you broaden your horizons and expand into these gold markets. Anyway, enough of me. How are you doing, David? I'm John Robertson, or JR, from Ideal Financial Group. That's a way to get hold of me. That's me, jr@i-deal.com.au, or you can call me on that. Really looking forward to hearing what David's got to say about the Aussie gold stocks, but also gold as a general, and also the waves. So really looking forward to hearing what he's going to say tonight. Anyway, enough for me. I'm JR, or John Robertson, from Ideal Financial Group. More markets equals more opportunities.
Thanks, John. How are you doing, everybody? Can you hear me okay? Don is saying my sound is a little bit patchy. Is that still the case, Don, or is it all right now? Who's excited to see the morning? A few hands went up there. Okay, beautiful. Sometimes when we're holding positions, it hurts. Who's been long gold recently? Raise your hands. And who's been feeling a little bit of pain lately? Quite a few hands going up. Now what I'm about is stopping that pain for you. We'll have a bit more on this later, and something that we should always pay attention to. So let's get moving. So here's how you can learn how to trade and invest in gold and Australian ASX gold shares using Elliott Wave. This is our disclaimer and warning, which John has amply given to you already. For those of you who are new, who's new here, type in the word yes into the box using this little trick, or put up your hand. Who's having their first experience of a David Hunt seminar? Chris, g'day, how you going? Welcome. Thank you for coming along. Appreciate you coming in. I know it's a little bit of a risk to appear here early. Anyone else is yes, here's what you're going to get. Basically, I want to show you some techniques as to how you can work out when to hold on to some shares, and we'll look at some gold shares that you might want to hold on to. We'll also look at when you should bail out, and in some cases this is called when to hold and when to fold, and I'm sure you're all aware of those scenarios. And how to judge the market strength and when to pass up on a trade and what you can really use. So I'm David Hunt, and I'm constantly fascinated by how market works. How our markets work, how does the stock market, the financial markets, the futures, commodities, I love getting involved with that. And day in, day out, I get to do that for a living. And why does a share go to a certain price level and turn at a certain time has always really fascinated me. And over the last 30 odd years, 35 indeed, 30 mainly, I've devoted my energies, time and focus to cracking the code in the markets. And I've spent literally hundreds of thousands of dollars buying books, paying for courses, travelling to the States and the UK, to Asia and internationally to learn from the best of the best. So I've even brought some of them, the best in the world, to Australia and worked closely with them, watching how they move, the moves they make, and why they do the things that they do. So that by employing simple, easy to use fine charting tools with a study of cycles overlaid with my economics degree, and then I learnt Elliott Wave and technical analysis and GAN and all that sort of work, I've come to reach what I think is a deeper understanding of how the markets work that I use for my Profit Hunter Group members and Australian Shares Report subscribers. Now, last time, at the last webinar, I told you that I'd lost $10 million in 6 months. I also said that was my best learning experience. And that learning experience far exceeded the amount of money that I made in the preceding 2 years of $65 million to end up being $55 million up in just 2.5 years. So what are your learning experiences that you've had, and what can you use going forward? Are your losers the best learning experience you have? Raise your hands if you've learnt more from your losers. Lots of hands going up. Lots of PhD traders as well. It's fantastic. So learning is not a pleasure, but it's an experience that you get to have in trading more times than we'd like to have. The best thing about losing is that you do have learnings. Making money is easy, and really in the long run it feels different than just making profits.
it sinks in. The emotion of it keeps you working, as long as it does not control you. So I've got a couple of questions for you, and I'd like to ask you a few things. Almost close to enable screen sharing. Okay. Are you currently an investor in gold shares of 5 years plus? Are you investing in shares for 1 to 5 years? Are you in trading gold shares over the 6 to 12 month period? Are you short or medium term trader, or do you trade derivatives such as COMEX, gold on futures contracts, CFDs, options? Right now the statistics are we have about 30% of people voted, and we can see that coming up now, and I think you can see the results that's coming up right now. Beautiful. And it looks like about 1/3 of us are short-term or medium-term traders in gold shares. About 20% invest in shares. I would say 26% invest in shares over the longer term, gold shares, and about 19%, 20% trade gold shares 6 to 12 months, and a quarter of us trade derivatives. Now those numbers would tend to be larger than than 100%, but that's okay because some of us will be doing different things. So I appreciate your answer there, and here are the results. I think you'll be able to see those results. That should pop up right now in front of you. Anyway, this says 11% invest in gold shares 5 years plus, 16% invest in gold shares 1 to 5 years, and 20% trade gold shares 6 to 12 months, 31% trade gold shares short or medium term, and 23% trade derivatives on gold. So thank you very much. That's really a telling tale there. We are quite keen on trading. About 50% of us are, more than 50% of us are traders. So who manages a self-managed super fund here? And any advisors in the room? Quite often I have advisors who pop up as PHG members. I don't find out that they're advisors until they sign up with a Gmail account, and then eventually they ask me a question from a bank account or something like that. So number of short and medium SMS holders as well. So thank you for that. So while we're on there, a little bit about me. I discovered Elliott Wave in 1988 while trading Forex for a semi-government authority. I was Deputy Treasurer and Forex Manager at Qantas, Proprietary Trader at Macquarie Bank, and a fund manager managing $4.5 billion worth of assets for what is now Aberdeen Asset Management in Australia. And I managed the SPY, I trade the bonds and Forex. And I was lucky enough, basically most of my professional life, to be able to just sit there and play with markets, play with charts. And my biggest learning experience came in 1989. And it wasn't, I'm a bit of a slow learner, I must say. Is anybody else a slow learner? I learned all this stuff on GAN in 1985, 6, 7, 8, 9, Elliott Wave in 1988. But it wasn't until I really got slammed in the head after being king of the mountain for quite some years in Forex trading that I really understood what Elliott Wave was about. So let's move on. So this is one of my PHG members, a very active trader, made more than that. This was back in 15th of April. If anyone remembers the 21st of April, was anybody at the ATAA in Perth, where I picked the top in BHP and said that was the top. Sharon says hi. Yes, she was there. Hi, Sharon. You're hiding there in your sunglasses. That was funny. Thank you for the body surf as well. That was fantastic, having a good swim on that Saturday. It was awesome. Or Sunday, was it? Anyway, so Phil was there. Phil, when you saw me, did you believe what I said? Did you have any understanding of what the hell I was talking about? Did you think I was nuts? This is where the BHP price was at that time. I think I can do a chart here. Yes, I did. You trade futures? Cool. So my approach is to try and pick the teeth, pick the eyes, pick the teeth out of the markets and do things at the right time and do things with confidence at the right time. There's quite a few examples of this. This was published in the Australian Financial Review on the 21st of April, and basically on the 15th or so, might have been earlier that it was published. Anyway, on the 15th, I was called up by David Coe, the journalist here, and he said, "What do you think?" Because my Kwan, that was just a normal ComSec account that Cindy trades on, no leverage. Now, picking a top involves ego, and so you have to be very careful, because if it's not right, your ego is very dented. So when David asked me, what do I think? I said, I think it's topped. We just sold it, got off the phone. We'd be doing a Profit Hunter Group speed webinar, and so I actually got customers to sell that of mine on that high, and then it just collapsed about 16% in 45 days. That was the top period there, bang, down. Anyway, so I've called the top in BHP a number of times, and I won't bore you with the chart on BHP, showed you what I did at the ATAA. These are things that I do fairly regularly. And what I like to do is to try and pick the bottom too. So we basically got most of the range in BHP with a couple of swing trades in between. So those are the things that I really, really like to do. What I'd like to do is to ask you not what your biggest fear is in trading. I'm sure we've got a few, but I'd like to know a little bit about what you think about gold before I go into my own belief systems about gold and the way the Aussie share markets are going. So at the moment we have about 30% of people voted. About 30% of those 30%, or 50% voted now, 30% have no view. 37% are bull over 1 to 5 years. 19% are bull over 10 years. 1% are bear over 10 years, which is interesting, I must say. And 15% are bearish over 1 to 5 years. So that's fascinating, actually. Thank you for that. 62% votes. Let's snap it off at the Fibonacci. And yeah, that's really interesting. Okay. So in essence, we have about 54% of us are bullish over the next 1 to 10 years. That's fairly high. That is fairly high. 15% of us are bearish over the 1 to 5 years. That's fairly low, and probably the more sensible people currently have no view. And those with the no view, are you waiting for my view, or do you have just no view? And if you don't have a view, would that imply that you don't care about gold and you just want to learn some stuff about the way we do things? Or are you looking for a screamingly good deal on a Profit Hunter Group membership? What are we doing here? Give me some answers, some honest ones. Unsure about gold is and we're headed. Don't want to think that far out, says Gordon. Kwan says, yay, you're that too. My view's always short term. G'day, Mark. Yes, I know that, even though you became an investor in BHP down at the bottom of the market. Leon likes to hear me talk. Louise is saying, waiting for expert to help me direct. Waiting for the dip, says Nigel. Thank you. So, a bull until 2022. I'm trying to I'm close to trying to get a deal for silver. Used to be a gold member. John, great. So there's a bit about me. I surf. Today I got an email from a Profit Hunter Group member saying he used to 15 years of surf boat crewing in Phillip Island at Woolamai, and that's cold. And Richard, oh yep, okay, well, talk to me about those ones. So, okay, so look, great profit hints for gold stocks. So the thing is, I surf the way that I like to trade. I do like to hang around for the bigger waves, not because I'm brave, but because I'm lazy. And I like to hang around for the bigger moves in stocks, not because I'm brave, but because I'm lazy. I've done lots of short-term trading. 21 trades in a row has been my most profitable trading in the Aussie dollar, just banging away and having great fun. But as I get older, that's not the way that I like to do things. So I don't mind. I help a lot of really short-term traders. Cindy's a very active trader, as you saw from her results before, and also a very good aggressive trader who gets in, gets out, and you know, Cindy's a bit younger than me, and why I like the big moves is because they go further, and you can basically get in and hang on, and if you make a few mistakes, you can stay with it for quite some time. Who's ever had that feeling? And as I said today, one of my Profit Hunter Group members emailed me saying he was a surfer in Cape Woolamai a long time ago, and I remember my hands going purple at when it was New Year's Eve or New Year's Day, and I was wearing a wetsuit that would have worked in spring very nicely in Sydney, but I was just absolutely freezing to death in Phillip Island. So there's always and that was in 1982. There's always somebody who's a bit more experienced than you, and this is probably me and probably one of my favourite waves, and it's just nice to sucky barrel in Phillip Island. It's just one of the most lovely waves you can have. Unfortunately, these days gets crowded. Anyway, Leonardo of Pizza, and this book was called Liber is a book, and somehow it got changed into Abaci, Liber Abaci, Fibonacci, and corrupted in many, many ways. So we've seen this book, and he stole the idea. Nothing is new under the sun, as W.D. Gans said. He borrowed the idea from Arab mathematicians, and in those days, before the Renaissance, the Arab world was the most educated and scholarly part of the world. They had beautiful things on astronomical things, astronomical work and sciences, and he'd borrowed this idea from the Arabs, and what they had done was they'd measured how rabbits increased their population, basically, and it's Fibonacci is a natural growth and decay way of doing things. So when we're looking at the overall structure of the market, Chris, my belief system is that it moves according to the ratios of the Fibonacci ratios. So if you divide 13 by 21, you have a tendency to come up with 61.8%. If you divide 0.618. If you divide 13 into 34, you tend to come up with 0.382 as a ratio. And so we're looking constantly for things like this in the markets. And Chris, you'll probably have realized such a retracement just happened in a stock called, Chris, do you know which stock I'm going to talk about? Chris, do you know what stock I'm going to talk about? No, we're going to talk about NCM. Now, Chris, were you at the recent Gold Waves webinar that I gave? Okay. Well, you probably, if you were, you can go back to the recording, but you might have seen the thing that you just thought was a little bit useless was actually the target that I had been giving for NCM at $21 for quite some time. No, Chris J, not Chris L. Thanks, Chris L. And you're asking me about why I was talking about these Fibonacci things. And I was targeting $21 for Newcrest. So Chris, the thing that you thought that was just useless actually nailed to within 62 cents of a shooting target. That's okay. From that, something that moved this period here, some 210%, a little bit further than it should have, but I was looking for $21 on that top side. So if you think what I'm just saying was here was useless, you would probably need to think again, because that's how one of the reasons I developed that target at $21 on Newcrest. Sharon said I said $21.75, and that's quite correct. This is a rough calculation. So thanks Sharon. Yeah, I gave it as a rough thing, and I've just done the retracement as a rough thing. I was looking for $21. The fact is, Sharon's reminding me I was about 13 cents out from that target. And Newcrest, as you can see, and Newcrest has broken down on the monthly charts already, not very long after hitting $21.60 odd cents. So Chris, do you think that what I just told you was useless and that you needed to get on to something quicker now? Elliott Wave, he called his book, this R.N. Elliott, called his book Nature's Law, The Secret of the Universe. And in effect, it is. It was then popularized by Robert Prechter and A.J. Frost. Because, Chris, for most people here, well, for many people here, they may not have seen this, and one of the things is that I want to teach people what they can use without me. Yes, I will. I want to teach what they can use without me. A lot of people use me as an advisor, but this is something you can walk away with, okay? So these are the building blocks of Elliott Wave. And so every wave, and each and every wave is part of a large wave set. What that means is if you are able to get confused, to get clarity, you can look higher or lower in terms of time frames. Hard and fast moves are impulsive waves or trend, and basically a wave starts when the nature of buying and selling ends. I have a classic example in the currencies, And so this is my structure of thinking. So this is a classical Elliott wave pattern. Wave 1 starts off, the market rallies up. Then we get a little bit of a correction when it tops out, and we have an ABC pattern to the downside. So what happens here is, on an ABC pattern to the downside, I'm getting ready to pick a bottom in the markets or the stock that we're interested in. And I'm looking for wave 3 to happen when wave 2 finishes at the end of wave C. So what we want to see is a push up. Wave 1 we don't get a hold of usually. That can be, we'd have to have used timing to pick the low. ABC, a low here, and we want to see a wave 3 happening, and then a wave 4, ABC, D, E, and then finally, often if this is a simple correction of an ABC pattern, a 3-wave in wave 2, wave 4 comes up with a complex, which is A, B, C, D, E, and we see often we can just get some measured moves where generally wave 1 measured up from the finish of completion of wave 4 can give you a price target of where wave 5 finishes. So it's a very useful way of thinking when you're in the markets. Recently we have seen in NCM a retracement, if we inverted it, that would be usually seen with wave 4 ending. So we get a pattern here, wave 1, 2, 3, 4, 5. At the bottom of wave 2, we have the most determined views that the market is going lower. Psychology in wave 2 is very, very bearish on wave 2 on the downside. On wave 3 is very, very positive, and this is where economists and people such like get all of the get on board. So our job as technical traders is to find out when a wave 2 is finishing, because this will make you 3, 4, 5, 10 times the amount of money you put at risk at any one time, plus you have about a 40% chance of making that money. It gives you a very good probability. Now you say that's not a very high probability, but the fact is if you make 4 or 5 or 10 times the amount of money you put on at risk, it's a worthwhile bet if you understand gaming theory. So we have an ABCDE pattern on the end, and quite often these wave 4s will be confusing. So wave 4s are confusing, wave 3s are parties. At the top of wave 3 everybody's a day trader. At the bottom of wave 2 everyone's depressed and they're looking for it to go lower. So this is the way the markets work. And I'm not going to do this stock. We're going to go straight to having a look at a chart. And the chart we're going to look at has no real Elliott wave count on it. Well, let's talk about this. This is Newcrest. I'll cover your question in a sec there. Now Newcrest, we can see, has retraced close to that 38.2% retracement, and I've done a rough calculation. Now you will notice here that Newcrest is in the position to go lower, and Rob has volunteered $16 as a retracement area. And he's quite correct, right? Now if this is the 4th wave, that would be a problem. That would be a high problem. And if you'd looked into things that, into Elliott wave theory a little bit further, you'll have noticed that we've gone exceeded the target that we'd normally associate with a ABC pattern to the upside for a normal ABC. And we don't really have the pattern that we want to see with Newcrest. So at the moment, Elliotticians would be saying, it's all well and good, but I'll probably wait for a pullback down to about $16 as Rob just suggested. So Newcrest has come back. This is a quarterly chart. When we drop down onto the monthly chart, we can see some more interesting things going on in here, and I'm sorry that there's a couple of lines in there which is very annoying. I don't know why that hopped up there. Just 1 second. That's back onto the 5-minute chart. Beautiful. Good to see. Never work with monkeys and charts and children in showbiz. So this trend line here is a bit annoying to watch. But we can see here we've seen 1, 2, 3, 1, 2, 3, 4, 5. According to the formula that I just gave you, that's not a 5-wave structure. We see 1, 2, 1, 2, 3 maybe. Do we have anything that's impulsive in this move? Up. Now we can see Newcrest has some gapping behaviour, definitely on the upside, and we can see possibly 1, 2, 3, 4, 5 maybe. Certainly we're having gapping movement to the downside. So Newcrest is not a stock that I would be that excited about given this behaviour. And the first target we'd be looking down to about $17.40. So Newcrest is off the cards. Now there's certainly other things that we look for, but Newcrest at the moment, it's certainly through a pattern that I taught at Train the Chartist. Was anybody here on Train the Chartist on the Gold Coast on the weekend? That was a pattern that I've posted to the Train the Chartist segment there for of the website. You can have a look at that one. Anybody raise your hands if you were there. It was a really nice group. I appreciate it. It was really good fun. Now I want to highlight to you something that's going on with a particular market, and that would be called the gold versus the Aussie chart. And you probably saw at the start or in one of the emails that previously this is the price of gold in Australian dollars. Has everyone just wave at, oh George, Tom, how you going? I hope you've logged into the Profit Hunters website and had a look at those posts. And when I see things that are relevant to the Train the Chartist, I drop them up there. So we can see here, let's move this down here so we're not looking at everything, that gold basically got to 1800 to 1900 US dollars, and the Aussie dollar was somewhere around about $1 to a US. So everything's a bit equal. This is back in 2011. I was lucky enough to go skiing in February with my boys at this time when gold was still above $1, and I was on the Financial News Network with Michael Yorba, and he interviewed me while I was in California skiing with the boys, and he said, what do you think on gold? Actually, it was 2013. It was early February. And he said, what do you think on gold? And I said, well, it's going down. No, it was actually 2012. Sorry. Apologies. It was in February. He said, what do you think on gold? And I said, well, it's going down pretty seriously. And it was like it had actually topped about an hour earlier in the US dollar gold price. The Aussie dollar was swinging around and compensating for what happened in gold to the US. But gold peaked at 1750 to the Aussie dollar in October 2012. I was speaking to the Traders and Investors Expo in Melbourne on that day. Was anybody there who saw me speak? I've got a recording of it, and I basically said this has topped, and in terms of the US dollar gold price, and it never really went up from there. It was around the 9th, 10th of October. Anyway, notice that the gold price was above $1. Okay, so what we see, Maria. Yeah. So what we see is a falling in the Aussie dollar down to 90 cents, and gold fell at the same time, but gold was not falling as fast. So gold got cheaper and the Aussie price got lower. So what we could see here is possibly wave 1, 2, or an A, B, C pattern, which ended up in this area here. And what we've seen now is that gold provided itself with a base in Aussie dollars at 1350. And when we look at the way that it's been moving, and of course this is a spread price, it's back up to 1750, which is where it was back in 2012 at the top. Now, if we were to do some Elliott wave counts, we might call this as a nice dip and a retest and a failure to get on with the job. So we want to watch carefully what the Aussie dollar gold price had done and watch for the Aussie dollar to flip. Is everyone with me? Am I being clear for you? So for the Aussie dollar gold shares, for the Aussie ASX gold shares, these shares that are heavily exposed to the gold price, unhedged against the Aussie, unhedged against gold, you probably have seen the best part of the move. If you are well ahead, I would check to see what their hedging policies are, how far forward they've sold the gold. Are they hedged currencies, or are they hedged, and are they hedged forward in terms of gold sales? Maybe if they're starting to hedge their Australian dollar receivables into the future forward, that might be a good thing. Now, a number of PhD members who are financial advisors have tried to get, have suggested to a number of the gold corporations that they take my advice. Hitherto it's been unsuccessful. I didn't do that off my own bat, but some gold hedgers and producers should be thinking seriously about at least selling forward in Aussie gold going into the future around this levels, because there's maybe $50 in it, and history proves that it doesn't like it up here. So here's another stock called RSG. RSG is down some 20%. Now, my data does not update on this particular package, but what we can see here is that when we look back on the quarterly charts, we see a mess. No doubt about it, it's been a mess, technically. We look quickly to see what sort of patterns that we're trying to evolve. We can see it's done a 38.2% retracement, so it may fit into the land of, oops, we've done a 38.2 or a possible big fourth wave. At the moment, it would be at the top of the fourth wave. I would bet that it would come back down to about 40 cents if things get gnarly on gold. Talking of gold, has anybody been trading gold? Who's short gold? Probably only a few people, like Profit Owner Group members. Anybody short gold? Few people. Hands up. Particularly short gold. Erica. Erica is short. She's a, dare I say it, very experienced trader, and Glenn's short. Actually, Glenn's on here, and every time Glenn is a member, I've got to show you this. Every time Glenn is a member, we have some brilliant trades in gold, and he's come back. He's let me write this email, this letter. He's come back from Phnom Penh, and while he was in Phnom Penh, he was trading through the Profit Hunter Group and using it, and we had some fantastic trades short gold in it. So it said trading with my help, it was enjoyable and profitable, not his sole source of income. And What he said here was interesting. I learned so much about trading over the few years I was with Profit Hunter Group, and I know you give a complete plan for each trade. Entry, stop loss and profit take targets, which make it very simple for me. But I still tended to do only the ones that appeal to my long-term mentality, even if they are short-term trades. And he says here, if the suggested trade was against my fundamentalist thinking, I generally didn't do it. This usually cost me. I'd been for many years an investor that just buys and holds, and now I know that's not the way to make a living. It's a hard habit to break. I think instead of using a plan completely on occasions, I was having a bet each way by making a trade of it, and if it didn't go to plan, I could always turn it into an investment. This has always cost me. But with Glenn, and with Glenn coming back to the PHG, I kept on remembering the fantastic gold trades we used to have. They're just beautiful, short $100 moves. That's $10,000 a contract for these big declines, big sweeping declines. And when we look at the gold retracement, we notice a few things. We notice that the price of gold has retraced back up to 1308 and failing. Now, we shorted gold once at and so I keep on thinking, maybe, Glenn, we can get another $100 trade. We got this big move. We got another one on the rally up, and then it went down again. We got some awesome moves. This one we got, and we also got that one. So with gold, not only that, we picked the bottom back over here. That was July. We also got the bottom in June as well. Sorry, December. So at one of the forecasting on one of these webinars. So what we can see here is gold, we started to short it over here on the breakdown. It's just here. And then it came back and we stopped ourselves out again. We stopped ourselves out and put ourselves short again on the break back down. So we've been short now gold since here. Where is it? Here. And that's about a 3% decline in about a week or two. So when we look at the trading profit and loss, it's only about 3,780 US dollars, which is, I guess, about 5,000 Aussie short on a contract so far. So we noticed there's some things going on which don't really serve gold well. And if it breaks, we've been looking for 1224, which it managed to reach last night on the low. And it's rallied today a little bit, but not convincingly. So gold, the underlying business of the Australian gold shares is not doing well. Yet what we saw in the past was, and we could call this wave 5 up here. So let's put that as a wave 5. So I was warning about this at the last Gold Waves webinar, that the next one up to around about $1,300 we would be looking to sell. And we certainly did that. We had a small loss. We got out at 12. We got short at 1270. Got out at 1278. So that's about $800 a contract. And so we're ahead about, say, 3,000 US at this point. And we call that wave 5. Now the job we want to be getting into is whether we do A, B, C, and we can see that for some reasons there's when we pick up some trending indicators, we can see not much trend. What we can see on the monthly charts is that it's also not trending much, which is what you would expect in a wave 4. Wave 4s often come back to the fourth wave of lesser degree. So now these gold shares, should it break down below about 1200, the potential is for 1121, 1080 and possible new lows down towards $950. So far we've had a mania in gold shares, and the US dollar has started to crush that. And with 54% of us bullish on gold shares on various time frames, over various time frames, we should be exceedingly careful about having gold positions. Now, for those of you who want to see the timing of when I expect gold to bottom, I suggest you purchase the forecast webinar or attend the next forecast webinar where I give the timings. So let's move on. Let's look at another stock and look at it in a different way. Now this is gold versus Santa Barbara mines. SBM, you can see up here, this is a spread between the two. And we'll do it on a weekly chart. Now gold, one Santa Barbara mine used to be worth, one gold bar in 2014 used to be worth something ridiculous in Santa Barbara's, something like 1700 Santa Barbaras or Saint Barbaras. I never know which is the right one. Forgive me if I sound like an idiot when that happens. But we can see that Santa Barbara is down around where it used to be, where it's worth something like 400. When you do I've done a scaling factor here, so it's not perfect, but we're back down to where gold is worthwhile buying against Santa Barbara. Is everyone understanding what I'm talking about here? Or am I being a little bit cryptic? We can feel this is basing at the moment, and so I would rather be long gold than Santa Barbara. Now when we flip to the other side, Tim, what I'm saying is the value I'm pricing now Santa Barbara in terms of gold. And what we saw is back up at these highs, Santa Barbara being worth not much against gold. So as gold gets more valuable as this index goes higher. Gold gets cheaper versus Santa Barbara as this index gets lower. Are you understanding that, Tim? So Santa Barbara is now expensive relative to gold. Gold is cheap relative to Santa Barbara. Is everyone understanding that now? I'm getting a little bit more complicated. Yeah, Tim's got it. Santa Barbara has had a great run. Now, I want to flip around and actually look at the Santa Barbara chart now. And Santa Barbara is one of the few that I believe has maybe got a little bit more legs on it. But we can see another one of these wave 5s coming in, terminating patterns. And we would expect a pullback down to $1.60 or $2 at the moment. So it's still trying, but you want to run a mile below $2.33. So we're getting here a wave 4. We're in a wave 4 there. We've come out of wave, I can call this a wave 4 myself. I'm happy to do that. It's a little bit of a rough one, but let's call it A, B, C, D, E, wave 5. So anything pushing up towards that $3.30, which has been one of my targets areas, just above $3 actually. Anything getting above there is pushing it poo up the hill with a feather. So stop is at $2.35 if you're long, and if that's taken out, you'd expect it back down to $1.90. Now, one of our PhD members has been trading this like crazy. Jen, I don't know if Jen's on at the moment. That has trading in and out of that like you wouldn't believe. It was awesome to see. She used to work with a gentleman called David Fuller of Fuller Money. So who's heard of David Fuller? One of the most famous chartists in the world in the ages, and I'm pretty proud to be advising her on the Profit Hunter Group. It's nice. So there's some gold stocks. Let's look at our XGD, which has been exceeding all boundaries and targets that I had been setting. Now let's drop up to the monthly charts, and we can see that the monthly charts, 4,500, it put a line in the sand. Now, what sort of retracement did it do? Step 1. Just over a 38.2. Chris, you'll notice why I talk about these things now. It's not just for idle chit-chat. It's actually so you understand what I'm talking about. So we're going to show a bit more bars. It's got up to here. I thought it would do 4,300. It did 4,500. It got a bit over exuberant. A bit over-loved. So, Tony, how was your head after the Train the Chartist? Tony flew in from, we had a lady who'd flown in from Korea. We had a lady, Tony come in from London to do the Train the Chartist in my house in Melbourne. It was like, I was flabbergasted that people would travel that far. And then in the Gold Coast we had somebody come from Darwin, somebody from Mackay, somebody else was up from somewhere else. $3.23 is the proper target there for you on that question, Tony. So I hope your head was going well afterwards. Okay, so I've been looking down towards 3,800 for a retracement in the XGD. Now you can see on the monthly charts when you simply look at a candlestick, it went too far too fast, and really you could even allow it back down to 3,000 for this without too much trouble. So that's the overall gold index. It's been overloved. It's done a nice retracement, and you could think about 3,800 or 3,000 on the downside. Okay, and moving right along. So I've explained to you using the stocks, the tenets of Elliott Wave. One of the things I do is I teach a course called the Trader's Green Room, and I teach in this that all waves of similar degree will relate in both time and price amplitude. So it's a bit of a higher level thing. That's a 6-month course in individual, personal, hands-on trading. I only take 2 people per 6-month period for that. The other thing is that impulse moves follow corrections and ebb and flow. And the most important thing is you make the most out of impulsive moves. So if you were short, to use this example here, if you were short the gold index from up here in 2011, and certainly I met so many people in 2011 who were long gold and silver, I couldn't believe it. And I was saying, you better be bloody careful. And they were long physical, they were long stocks, and it was just horrible. I kept on saying, take some profit, if you're not even in profit, make sure you've got a stop loss. Do they listen? No. So we see the big decline. If you had have just kept on holding on through this fall, you make money, like money, like money, like money, as you would in this rally which lasted 1, 2, 3, 4, 5, 6 months. It only lasted 6 months. So that's good. Maybe it comes back to 3,500. Maybe it comes back to 3,000. We don't know, but it's certainly in a lower time frame correction at this point. We can see it's already breaking down on the weekly charts, and we can see that it's doing a little bit more damage to itself than we'd like to see, and probably get it above 4,200. So we make most money from impulse moves, long or short. So we're going to make it easy. If we're going to make it easy for ourselves, we want to basically look for one type of wave. And if we want to trade wave 3, then we look for wave 2s. Wave 3s are the really big moves, which have a lower percentage than wave 5s, but they have a higher reward. So you should look for the preceding wave type to identify which one to trade. Who here thinks that they could identify markets now pretty easily? Who's been going, yep, got that? Raise your hand. Not many hands raised. Malcolm? Malcolm's done a few webinars and has been a PhD member before. And one person other than Malcolm has raised their hands. Odie, yep, I know you've got some experience. Who here could not do that in their heads right now in 2 minutes? Raise your hands. Lots of hands raising. Hey, Jason, how you going? Ralph, okay, Antonius. Okay, so a full market cycle consists of 5 waves, which are impulse moves, and we label them 1, 2, 3, 4, 5. The corrections are wave 2 and 4. They're followed then by a larger corrective wave, which are either 3 waves, simple ABC, wave 2 or wave 4, or a 5 waves complex can be in wave 2 or 4. Mark says easy in hindsight, but you've seen me day in, day out talking about this. Here's some guiding rules for impulse waves. Wave 2 will only retrace part of wave 1, not all. Wave 3 should not be the shortest versus wave 1 and 5. So here, wave 3 is not the shortest, so we see here this leg up would be wave 1. This leg up here would be wave 3. This leg down would be wave 2. So we would see wave 3, this is being wave 3, and then when we get a correction of this sort, we would expect this to be wave 4. By the way, if you find this hard to do, if you find this hard to do in your head, I do this all day in about 2 minutes flat, as I've been told, less than 2 minutes for people who ask me questions in the Profit Owner group as to where a stock will go with a reasonable degree of accuracy. See here we have a little wave 1, 2, 3, 4. That's what's showing that wave 3 has subdivided into wave 5 waves. Now you can all read all of this, and these are the rules, and sometimes just remember they're all corrections. So what's happening in the Rubik's Cube of the market? The important thing to look for is the corrections. You're looking for wave 2 to identify when wave 3 will happen. You're looking for wave 4 to identify when wave 5 is happening. And these are the 6 corrective patterns that I use in my head, and these are the ones that I recommend you look for most when you start to do this for yourself. A zigzag pattern, the ABC pattern that we've seen before. Yep. And a horizontal triangle, an A, B, C, D, E pattern. This is primary. This is primary. This is good to look for. This happens, you don't look for these, I don't look at these. This is, if you're looking at these things, then you're probably going to blow your fuse. Who's been trying to look at one of these and they've blown their fuses? And this one, this irregular ABC pattern, this is one reason why I could go on the Financial Review to say this market has topped. So who here is going to devote their time to finding wave 5s? They work 70% of the time. This is the top in the AFR, and this is the reason. This was an irregular ABC pattern. So this is what a corrective wave looks like, a 3-wave pattern. Often you get a triangle or a B wave. Often B waves are triangle. Here's a classical 4th wave correction, an ABC pattern, D, E, and a triangle to go one higher. Are you getting this? The 4th wave triangles are one of the most useful things about Elliott wave. 70% of the time you can expect them to work, and we have the probabilities of making $1 for every dollar that you put at risk 70% of the time. In a 4th wave, 50% of traders will be bullish, 50% of traders will be bearish. There will be a prior fast, powerful up move or down move. It's often a triangle. A 38% retracement is usual. We have seen that in Newcrest. We have seen that in gold. So what do I do with my experience? I give buy and sell signals on the ASX, Forex and commodities. Most of my Profit Owner Group members are ASX investors and traders. I give profit targets, stop losses. I give profit takes plus trade management and coaching. And I also give speed webinars, which set you up for the trading day. Quite often we will have buys during the webinar sessions. I'll give you setups and Profit Owner Group trades. I'll answer questions on any ASX share, commodity, Forex pair, anything you want to trade, I will give you those. There's a gold market packages. The ASX only package is $3,997 for gold membership. The commodities package is $2,500. The Forex package is $1,997. The world indices and US stocks package making it at $10,988. That gives you the ability to ask me questions all of the time, attend a live webinar. So you could choose any combination of these or as a gold and silver package. Today, special full gold membership, which is normally monthly membership, is normally $7,500 for the year. We'll have a limit of 3 places by application with 100% money back guarantee. If you email now and sales@adesk.com.au, request the application form and call by Friday 1300 552 182. We'll arrange an interview and there's a 30-day money back guarantee for you. No risk at all. You pay, I give you the money back. So we talked about the gold already. So you need to go with a flow and you need to leave your ego at the door. You don't need to forecast. It is about the trading and you need to watch the corrections and hang on for the impulsive moves and always trade with a stop loss and understand Elliott Wave gives you structure and trades even when you are wrong. Now, put up your hand if you can do this in your head. Who can do this in your head now? Better still, who can't do this in their head? Well, then you probably named me, as a few people put up. Now, if you want to get better at this stuff and also get an idea of timing the market and how to forecast, I'm going to have a special offer in Sydney in June 25 to 26. It's a special price for those people who are attending. Now, there are some pretty big bonuses which you can see when you go to this link for attending, and it really is something that I recommend for people who've been struggling with the markets or people who want to get better timing into the markets. And this link is the one to look at. And I'm going to put it out for you. And what you're going to get is a $2,000 bonus for this, and you will save, you will save $1,000 for booking in tonight. You'll get a refund of $1,000 on the purchase price. You will get a silver membership valued at, for 6 months, valued at $2,000. On top of that, it's on in Sydney. It's at the Key West Hotel, 25th and 26th of June. This is the link, and once paid, email me back. Well, actually, before paying, email me, david@ads.com.au. Ask for the coupon, and I'll send you that across, and you'll get 6 months silver PHG membership. And that's $2,082 value. And I've just put the links through on your chat box. You should see that there. And that's for fast action. That will go away. It's only for those people who are here tonight. That's the fast action bonus. You'll get $1,000 off the price, and the coupon save $1,000. You have to tell me that you're at the webinar today, and that will apply for as long as there are 15 attendees. First 15 attendees get that bonus. If you don't get it, if you're not in by the time there's 15 done, there's only be 15 coupons. Okay, now let's move on. Elliott Wave gives you price objectives, targets, time targets. That's something we'll be doing in the forecasting. Just to give you a tip, Wave 2 often retraces 50 to 70% of Wave 1 with a tendency to 61.8%. So if you need more information, have you ever gotten into a trade where you shouldn't have? Have you ever been confused as to the direction of the market? Have you ever been stumped as where to put a trade on? Raise your hand. So you can learn with me. If you want to help, you can get help with your trading, join the Profit Hunter group. We talked about the memberships, the Elliott Wave programs. You can get a trial of L-Wave at s.com.au/software. That's Wave Trader Classic and Wave Trader 3 are very useful for Elliott Wave. Advanced Get also does Elliott Wave counts of sorts that I don't quite understand. And if you're wanting to buy software, L-Wave is probably the best. It will cost you somewhere around about 3,000 Aussie dollars plus data at the current exchange rates. And if you need help with your trading, let me know. Happy to help. And silver memberships, you can join. Silver memberships start at they're at as high as $347 a month for the full membership, and $297 a month for the ASX only membership. I'd like to thank you all for attending, and very good roll up. I only told people I think about a day and a half ago or 2 days ago, and good to see you all here. And I'll be on Your Money Your Call, I think around about the 7th or 8th of June, and I look forward to seeing you. And just if you're contemplating the gold membership, scoot me an email to sales@ads.com.au. That's a special offer. You save $2,500 off a normal full membership. If you would like an ASX membership, send me an email. It's a slightly better price than that. What you miss out on is the commodities. And if you're thinking of a silver membership, send me an email. It's good to see Mike. Also, I'll be in Train the Chartist in Canberra. That will be, I think, on the 18th of June. And have a look at the website there, which is called profithunters.com.au/events. Thanks, Leon. Thanks, everybody. Have a good night. Appreciate you being here. Just be careful on the gold stocks, and we will talk soon. I'll just give you that link there, Kwan. This will be direct to you, Kwan. The gold forecast webinar is on the forecasting webinar is on next Monday, and you can book in on the right-hand column of the site. At the moment, give me another. If you look tomorrow, you'll see it there. You said the link did not work. Okay. Okay. Best thing you can do is to go to this one. Go to that link, and then from there you will see, from that link you'll see all of the events there, Kwan. Is there any questions about the seminar? Yes. There's a limit of 30 places at the seminar. I'll be teaching every timing technique that I find useful. The way that I picked BHP to bottom in January, as you would see from the forecast webinars for those people who've done the forecast, to the high on the 21st of April, where I proclaimed to the ATAA in Perth why it would top. And I went on the line there. So what you can do is you can go to, if you need to find these things, you can go to, where's Chrome? Okay, you can go to Chrome here and go to profithunters.com.au/events, and that will come up with, see here, profithunters.com.au/events, and then you can see that the website's going very slowly, but you can see upcoming events. I'll be on Your Money Call on the 8th. Your Money, Your Charts, next one will be on the 16th. You can book in for that. The Train the Charters seminar is in Canberra, June 18th. You can click on there, click on this and get information. The Ultimate Forecasting and Trading course, you can pick that up here, information there. We'll also be doing the same thing in Bali on June 9th, July 9th to 10th, for those people who like a holiday. There's only going to be 30 places, and you can click on this link here and you'll get more information and come to that one. Richard, for your renewal, contact me. There you go. You can even hear me trying to be musical. So information is there. If you want to get the information for that, it's here. The $1,000 discount was on the forecasting course. Kwan. As I said, 30 people, that'll be enough. 2 days in Sydney. That's correct. And I think we'll leave it at that. It's now 9:25. I wish you all a good time. And that's for the first, that $1,000 discount is for the first 15 places that are bought tonight. We've got about 180 people that have joined, plus the people who will watch the recording later. I wish you all well, enjoy, and good night.